This is the worst drop in Tesla stock we have seen in a very long time. At the time of recording this video, Tesla stock is down about 13%. What do you need to know? Well, we'll get you caught up to speed here in this video, as well as all of your breaking news today for Tesla stock and the broader markets. First up, it's obvious why Tesla stock is down 13%. I did not think this was going to happen, let's be honest, because I expected some kind of uncertainty to be alleviated, whether that was guidance on deliveries, guidance on margins, or something else to give investors clarity. See, I've said it before and I'll say it again. The markets, they don't particularly like bad news, but the markets like bad news more than they like uncertainty. The markets do not handle uncertainty well. So Tesla refusing to give us solid guidance or refusing to give us margin guidance, well, is the most uncertainty you could possibly have. So think about it like this. If margins get better or worse, if deliveries come in better or worse, that totally changes the valuation of Tesla. We could be paying extremely egregious prices for Tesla stock today if the business gets substantially worse in 2024. Or Tesla stock could be insanely cheap if things are better than expected. We have no idea if it's going to be bad or good. So investors typically in that scenario, they sell first and ask questions later. Good news is Tesla stock has never been this oversold before. Tesla stock is sitting with an RSI of 16.85. Anything under 30 is oversold. You are at the bottom of the barrel. You literally have no strength in Tesla stock whatsoever. This could be in a short-term bottoming effect, as some people might feel more confident buying Tesla stock at 180 because you're going to have to see a pretty rough 2024 if 180 is a bad price to be buying Tesla. So long story short, I think Tesla stock finds a short-term bottom around 180, whether or not Tesla raises prices or more likely cuts prices from here. And how your weekly insurance registration numbers come out is, well, what is going to drive Tesla stock higher or lower. But at 180, you're relatively safe. You would have to see a very bad 2024 for it to not make sense to buy Tesla at $180 per share. It's also worth mentioning that when rates start to go lower, long-term growth can be valued higher. Right? So if Tesla is expecting growth to reaccelerate in 2025, the markets tend to price out like a year or so. So by the time we get to like the middle of this year, markets are going to be looking at pricing out for the middle of 2025, and that's when Tesla stock might actually start to perform a little bit better. If we do indeed get good news, well, Tesla could see a bounce a lot faster. And I think if Tesla stock does start to see some good news or get a bounce, it could be pretty aggressive considering the stock is at a record oversold level. If we take a look at the option activity from hedge funds and institutions in Tesla stock today, you have seen 1,878 orders totaling $652.5 million with a positive order value of 37%. It is extremely negative today. What's actually interesting, if you look at the total volume numbers, 52.44% of the volume is to the calls, and 47.56% of the volume is to the put side today. And look at that, cost to borrow fees are back to about 10% on Tesla stock as short sellers are trying to take out short positions in Tesla at basically unprecedented scales. It seems like everyone wants to short Tesla right now. That does create more downside volatility. As you can see, Tesla stock down about 13% today. A lot of that is due to the short positions being taken out in Tesla stock today, but it does make a subsequent bounce potentially a lot more aggressive, as some short-term shorts maybe get caught on the wrong side of things. If you're shorting Tesla at $180 per share, you're kind of crazy. Your time to short has long passed. We do have more earnings coming out today and after hours, including Intel, Visa, KLA, Western Alliance Corporation, Capital One, T-Mobile, Levi's, L3 Harris, and Western Digital. You also have American Express that reports earnings tomorrow in pre-market. Intel and KLA, these are both semi-chip producers. suppliers. KLA is more of a supplier. Intel is more of a producer. These earnings could affect your semiconductors that have been on a rally as of recently. So watch to see if any of the air deflates out of that bubble, if you will, in the next 24 hours or so. Visa, Capital One, and American Express will be important to gauge how the consumer is doing and likely how the consumer will do in 2024. So they could also move the broader markets. Approximately 1,627,722 people that bought a Tesla in 2023 never owned one before, according to Tesla. Porsche has unveiled their first ever all-electric SUV, the Macan EV, starting at $80,000, $107,000 for the turbo variant, up to 380 miles of range and 0 to 60 in as little as 3.1 seconds. Pepsi said in a new CNN video, these Tesla semi-trucks can run up to 500 miles on a single charge in a single day. So between two drivers, one truck, in 24 hours, we are able to run 1,076 miles on a single electric truck. Now, my grandfather drove semis across the country to every state besides Alaska and Hawaii over the last 30 years, so I know a thing about semi-trucks and how things go. You typically get paid per mile, so he would normally drive about 2,000 to 3,000 miles a week. So if a Tesla semi-truck can do 1,000 plus miles in 24 hours, yeah, that is a lot better than where things are currently at today. We did get news on Tesla's earnings that ground has been broken for Giga Nevada to expand the semi-truck operations. I doubt this will be a story for Tesla for a long time as far as growth and revenue and profits, but eventually, well, we can look forward to Tesla semis being a material part of Tesla's business. Lucid teases their third vehicle, a compact crossover to rival the Tesla Model Y. Peter Rawlinson said the new car is coming in a few years and production will take place at Lucid's new plant near Jeddah, Saudi Arabia. Hyundai today predicted slower sales growth this year due to weak demand and economic uncertainties such as interest rates, inflation, and signaling further challenges for the auto industry. Canaccord Genuity has lowered their Tesla price target to $234 per share from $267 per share. They maintain a buy rating. They did put out a more bullish note on Tesla stock today. This is kind of long, but we're going to go ahead and give it a read. Quote, "It's time to be patient. The next generation vehicle, FSD upgrades, margin improvement, and Optimus will likely bring an acceleration in revenue growth, but not this year. 2024 will be a subdued, probably trough, but still relatively slow. We model 18% year-over-year revenue growth. Growth curves are seldom smooth and Tesla is no different. As we wrote in a recent note, technology adoption curves aren't generally smooth. Not only does growth accelerate and slow, but for some technologies like autos and washing machines, we have gone through periods of reductions in adoption, likely due to macroeconomic/geopolitical factors. And we are firmly not in the camp that Tesla is just a typical auto company or that Tesla's growth will slow forever. Is Google just another advertising company? Apple just another telecom equipment company? Netflix just another media company? Amazon just another retailer? Those companies change their respective industry paradigms through the implementation of technology tools / Silicon Valley thinking. As has Tesla, and Tesla also has multiple levers to re-accelerate growth and improve margins. We will just have to wait for them to kick in for now. We think the first catalyst to reignite investor excitement could be margin improvement. We appear to have bottomed for now, but investors are likely waiting for step change progress. That may come this year, particularly as we think the days of big price reductions are likely behind us. We will see. So it's time to bide time. Wait for the next leg up in the stock. We are still quite bullish on Tesla's long-term growth prospects. We think EVs will replace ICE vehicles despite recent countervailing narratives. We see vehicle autonomy as one of the highest value-creating technologies to be deployed ever. And Tesla, with its razor-to-razor blade approach, is a leader in this real-world AI. We think Tesla is Apple on steroids as it focuses on manufacturing and a higher level of vertical integration. Tesla is the sustainability behemoth in our opinion. It's also worth noting that Tesla has one of the most, if not the best, balance sheets that you will ever find. There almost is no better than Tesla's balance sheet. No debt, $29 billion of cash and a highly profitable business, even in bad years. I do believe with kind of Genuity, if Tesla's margins do continuously improve, if we do not have more large price reductions, Tesla stock probably bottoms here in the 180s. To the contrary, if Tesla continues to cut prices, there is no saying where the stock could go. I think today is likely a rude awakening for Tesla's team, that they have to start focusing on margins. Even if they don't provide guidance, they can't just be reckless and continue to cut prices, or Tesla's stock, well, it's not going to be so pretty from here. It's also worth mentioning that your risk to reward, your risk premium, is very high now, because the odds are you probably make money from here, or at least the odds are better, rather than Tesla stock continues to fall, especially in the short term, again, as Tesla is severely oversold. Tesla stock is down 25% so far in 2024. And Ives with Wedbush, he now has the highest price target on Tesla stock on Wall Street. I expect this will probably get lowered here in the near-term future. His price target is $350. He says, quote, "We were dead wrong expecting Elon and the team to step up like adults in the room on the call and give a strategic and financial overview of the ongoing price cuts, margin structure, and fluctuating demand. Instead, we got a high-level Tesla long-term view with another train wreck conference call." Now, I don't think the conference call was necessarily a train wreck. I think it was just brutally honest. And the brutally honest situation is, we don't know what demand's going to look like. Tesla, well, they could have provided margin clarity, right? They could have said, hey, margins can fluctuate a little bit depending on commodity cost, depending on other different smaller factors, but they should have said we're done cutting prices. No matter what the production or demand picture looks like, we're not going to be cutting prices unless something very drastic were to happen and we go into recession or something crazy along those lines. If they could have done that, the stock would probably be green right now. So I don't think the conference call was a train wreck. It just really didn't provide much clarity, because I don't think Tesla, Elon, or anyone else, I don't think you or me, has a clear outlook of what EV demand is going to look like for 2024. And unfortunately, the markets don't like that. But a train wreck, I wouldn't use those words to describe it. I think it was one of the better earnings calls we've had in a long time from Tesla. Honda has revealed final specs and pricings for the first mass market EV, the Prologue. Deliveries start in March. The pricing and EPA range you have on the low side of $48,795, 296 miles of range. And you do have on the high side about $59,000 with 273 miles of range. Gene Munster says, one of my 2024 predictions was Tesla would not announce a next-gen cheaper model. It's looking like I'm going to be wrong. While the company stopped short of announcing a product, yesterday's call effectively introduced the first sub-$30,000 Tesla vehicle. I missed this because I believed a Tesla announced an upcoming new cheaper model. The Osborne effect would kick in and demand for the Model 3 would slow this year, making a difficult 2024 meaningfully more challenging. Bottom line, Tesla's likely going to announce a new vehicle later this year that will slow Tesla sales. It looks like revised consensus for 2024 revenue growth is gravitating to 13%, down from 19% previously. My sense is the year will end up 10%. For 2025, I believe the first half of the year will grow around 10%, accelerating to 30% in the back half of the year when the new vehicle production begins, ending the year with a blended 20% growth. Here on the day today, 10-year Treasury yields are down about 5 basis points to 4.12%. The 10-2-year yield curve inversion continues to uninvert. You're now only inverted 16 basis points. In December, you were inverted about 48 to 60 basis points, which means you're potentially getting closer to a recession. Since 1950, the yield curve inversion has predicted a recession, but every single time, mind you, but not when you're inverted. It's when you uninvert that you actually are heading into a recession. Who knows? This time could be different, but when you go positive on this 10-2-year yield curve, that's when the markets may start to panic a little bit more about a recession. In a little bit of weird data today, durable goods orders month over month for the month of December came in at 0%. The estimate was 1.1%, so that was quite a big miss. But your GDP growth rate quarter over quarter, advanced data for Q4, came in at 3.3%. The estimate was 2.3%. So it looks like GDP is doing okay, doing just fine, actually better than expected. But durable goods orders, a component that comprises 70 to 73% of GDP, well, came in much lower than expectations. So very strange. On one hand, good news for the Fed, durable goods orders, people are not spending as much money, not buying as many things. That's good news for the Fed. GDP being better than expected is good news for the markets. Overall, a pretty solid day on Wall Street today because of this data. Tomorrow, we are going to have PCE, personal income, and personal spending, in which we will break down the estimates and what I think and overall how this could affect the markets, coming in the next video at 8 p.m. tonight. Here on the day today, the markets are still pricing in 6 rate cuts for 2024. Odds are actually increasing today from 33.9% yesterday to 38.4% today. There is 29.6% odds of 5 rate cuts and 18.6% odds of 7 rate cuts for the entirety of 2024. For the Fed meeting of March 20th, 2024, we're still pricing in a pause. Barely. 50.9% odds of a pause, 48.1% odds of a rate cut. So the data coming out tomorrow could sway the odds ever more slightly in one way or another. It's actually good news we're no longer pricing in a rate cut for March, because that gives the Fed optionality coming next week on Wednesday when they have their next Fed meeting on January 31st. If the markets were definitely and indeedly pricing in a rate cut for March 20th, the Fed may have been a little bit more hawkish. I still expect they're going to be a little bit on the hawkish side, try to push out some of those rate cuts, but it makes the Fed's job a little bit easier, and it means the markets, well, are not going to be as surprised when the Fed says they're not cutting rates in March. We do have a new AI investor sentiment survey that is out, and boy, is this one surprising. Bullish investors have decreased to 39.3%, albeit stocks are hitting new all-time highs, or the SPY, the ETF, the S&P 500, the NASDAQ is hitting new all-time highs. A stock like Tesla, well, not even close. Your average stock, not even close to all-time highs. But your index is driven by the Magnificent Seven names. You're more so in line with your historical average of 37.5% bullish. Neutral investors has been rising a lot recently. Last week, you were 32.9%. This week, you're 34.6% neutral. Historical average for neutral is 31.5% of investors. So you're above the historical average for neutral investors. Bearish investors did decline a little bit from 26.8% to 26.1%. Historical average for bears is about 31%. Global inventory numbers for the Tesla lineup shows the Model Y inventories ticking down a little bit. The Model X inventories trading sideways around 1,800. Model 3 inventories at still 12-month lows at less than 1,000. Model S inventories at about 800, and again at about a 12-month low. Google Trends data surprisingly is showing an uptick for all models. Model X, Cybertruck, Model 3, and the Model Y. So this is pretty encouraging so far. Tesla continues to run about 400 different ads globally. I don't expect this to change much. As the CFO said last night on the earnings call, they want to advertise, they want to educate people, especially in countries like Japan that just don't have a lot of penetration or knowledge of EVs, but they don't want to spend an egregious amount of money to do so either. A percentage of stocks above their 50-day moving average today increasing to 63.76%. But again, this shows you just how top-heavy markets are, because you hit the high on December 28th when about 86% of stocks were above their 50-day moving average. The average stock has been falling, whereas the markets have been rising. This will become very important next week when we get Apple, Google, Amazon, Microsoft, and a bunch of other stocks that report earnings, because what's going to happen here is big tech is likely to come down and catch up or match what your average stock is doing, or your average stock is likely to catch up to what big tech is doing. The Fed on Wednesday will also be a big factor of that. There's a chance that we get quantitative easing that may be announced, but we will talk about that more in the next video, so you definitely don't want to miss it. And that could actually be a very bullish catalyst for, you guessed it, Tesla stock. Considering Tesla stock is down 12.5% right now, this is shocking. Tesla is the most talked about stock on StockTwits today, but what's truly shocking is the sentiment gauge, which is at 98 out of 100, categorized as extremely bullish. Message volume is at 100 out of 100, extremely high, and the participation ratio is at 45, which is normal. Now, Tesla's stock being down about 12.5% today creates an optimal position or point to potentially get into a bullish trade in Tesla stock. This is likely a capitulation phase that you are seeing. Weak-handed investors that could not take any more pain, or people that were leveraged on Tesla stock and maybe margin, are forced to get out of those bullish positions. Not to mention the egregious amount of shorting that is taking place. There's a lot of, well, bearish sentiment on Tesla stock today. You can see it in the price action of Tesla stock. The RSI being at 17.22 suggests any positive news from here could be a big positive and could, well, help bottom out Tesla stock. Notice on the day today as well, $180 has held very well. Actually, the low of the day today was $180.06 per share. So as long as we can hold 180, it looks like a pretty good moment of time to start to scale back into Tesla stock. And that's exactly what I did as well today. Let me know what you are doing with your Tesla position down below in the comment section. In the next video, we're going to break down exactly how this drop in Tesla could be very beneficial for longer term investors. But that is going to do it for this video. We will have more commentary, more breakdowns on Tesla stock to go over in the next video, as well as the data coming out tomorrow and why the Fed might actually start to, well, quantitative ease in the markets. And that could be very bullish for Tesla stock, specifically interest rate sensitive names, thus bringing down your actual treasury yields, which has a direct correlation to economic activity, whether people buy cars, houses, things of that nature. So that's going to do it for this video. Hit the like button as well as subscribe to the channel if you made it to the end of the video. You guys have a fantastic rest of your day. If you guys want to come trade with us, check out that link down below in the description of this video to come join the trading community. If you guys also want to stay ahead of the action, check out the X account, Michael Tyler. Go ahead and give it a follow over there. It is free 99 to do so. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.